Let's go, buddy. Let's go. Let's get these questions out the way. It would be better if somebody share a chart, and let's break it down. Let's see what we can learn. Somebody who wants to join, they can do that as well. Retail is rough. Sure is. Let's see what he's got. Trying to get you to join. Wait. Hey, retail is rough.
Retail is really rough, man. It's ripping me apart.
You got a rough view over there, man.
Ripped me a third rectum, man.
Are you?
So, can you hear me well? Because last time I lost my shot because of a weak connection.
You're good. You're good. Go ahead.
I have a question, Zio Empire, aka Godfather. Why do I keep doing the same things I do, knowing that they would hurt me? For example, let's say I change my habits, right? I change my habits, and after 2 months, I fall back to default because the pain is there. I'm so used to the pain that's so ingrained that it just not feeling the pain just feels not normal. You know what I mean?
Right. Slow down. You summed it up with the word pain.
Oh, okay.
Summed it up with the first sentence, and I'm just gonna say it differently.
And just to distill what's in my mind. Sorry, just to cut you off. And what I mean by pain is, there's a certain pain that makes a man cry, right?
Pain.
There's a rhythm of pain. Yeah. There's the rhythm of crying is breathing in and breathing out while you're crying. The pain I experienced was not breathing in and breathing out. It's just breathing in so hard, like it's a panic attack. You feel like that.
Listen, you want to sit here for an hour and talk about the pain, or you want to sit and talk about the...
Yeah, no. I just okay, go ahead. You know what I'm talking about.
Well, if you let me talk, get to the bottom of it. Where is the source of the pain? What the hell? I mean, so tell us. What is the source of the pain? We all know how it feels. We all know it hurts.
I can't stop analyzing. Like when I pull the trigger, I can't just watch the charts without thinking.
All right, listen. Do you trade certain sessions? Just pull out your phone on the fly and try to see what look.
No, I trade the New York session specifically, and when I do, I just watch the chart for 2 hours straight and just leave.
How many hours?
2 hours straight, New York session, the first 2 hours, from 7 a.m. Eastern to 9 a.m. Eastern, and that's it. Take the laptop down and leave. But in these 2 hours, I just can't stop analyzing them and pull the trigger without second guessing my thoughts and decisions.
What's your trading strategy? Sum it up.
BF5. I'm enrolled in the game. I'm in it.
Okay, but are you selling
Like,
at the...
It's not the strategy. It's the psychological warfare. It's taking decisions.
Okay, do you have a set of rules that you follow?
Well, I follow rules where when I pull the trigger, I try my best to not. I don't look at dollar figures. I remove dollar figures from my chart.
What's your profit system? When do you know to get paid, and exactly how much?
At swing point, once my trade goes into 10, I have certain risk parameters. Let's say I have 10 pips stop loss, I use a certain risk. 20 pips stop loss, certain risk. And 30 pips stop loss, a certain risk. I don't change my risk. Okay? But the thing is, once I pull the trigger and I look at the chart, like,
Hey.
Oh, it could be the other thing. Oh, it could be this. It could be that.
Right.
It could be, yeah. No, I get a trip of all the trading strategies that I've taken in the past 4 years of trading, and they all just blend up with the things that I've learned recently in the last 2 months.
All right, we're gonna hand the live over to you, so you can just keep talking.
Oh, okay. I thought you were okay. I thought you wanted me to. Okay.
I
Go
didn't
ahead.
know about risk. Okay, you have a psychology problem and you have a listening problem. I asked you about your profit system. You get into a
Oh,
trade. Do you have a system on exactly when you'll get paid and exactly how much? If so,
oh,
tell us.
not that. I don't. I get paid when it hits my target. That's it.
Okay, and how do you set a target?
Uh, the previous swing high.
Okay, now you set a target that which is the swing high. How is more analysis going to get you closer or farther from the target? You have a target. Tell me how, if you can do anything, you can make the market get to your target closer or sooner.
Nothing.
Well, tell me, I can do it too.
Like what is time? I don't know. I just let it pan out, I guess. But like I
Well,
can't let it pan out without like my brain doesn't stop thinking.
question. Let it plan out. Okay. Now, if you have a hard time letting it plan out, all right, you got to ask yourself why. Well, we all know what to do. Okay. We all know what trading is, man. It's you find the deal. I don't think you have trouble finding the deal. Okay. And then you said you enter the deal. So I don't think you have trouble entering the deal. But obviously, the third part is letting the deal play out, which is what seems that to be your problem, letting that deal play out. But you obviously are desperate for the money. You can't let the trade go, or you're probably scared to be wrong if you're over analyzing. Like we said,
I'm not. If I was worried about the money, I like my risk is almost insignificant. I risk $1 per trade. I don't do anything anymore.
okay, how about being wrong? Does it hurt you when you go into trade and you do a whole bunch of analysis
No,
and then you?
I don't. I'm not scared of being wrong. I don't come like I'm not like a person who's right all the time.
All right, so
Academically, yeah.
you're cashing millions then. You got any other problems?
One more question. When it Mark Douglas, I've listened to most of Mark Douglas seminars, and there's that one time where he said the sample size should be 50 trades, and there's that one time in his quiz he said the sample size is 20 trades.
I never heard him say 50 trades. I never heard him that.
There's a 7 video series of him. He
What's
said, if I can execute 50 trades, but he was talking to a commodity trader. He was explaining his story with a commodity trader from the 70s that
listen.
couldn't
To
pull
make
it. Yeah.
ooh, listen. Forget 50. Forget 20. Do 8. Okay, that's your sample sizes.
8?
Trades. Yes. Now you got to understand what he means by sample size. Okay, you have to have the same system. Okay, so you can't change the system. One trade you do it this way, and then another trade you do it that way. It doesn't work like that. It's not a sample size. You think the
Yeah.
do you think the casino changes their system? Oh, this guy hit a jackpot. Okay, time to change the system. Let's change the random chip generators and all the machines. No, they let the whole series play out. Okay, rarely will you ever have to change the system. And if you do, it'll be after a sample size, not in the middle of one. But forget 20, forget 50. Do 8 trades all in the same way. Okay, same risk, same system, same entry method. Okay, it's just
Uh,
the
okay.
same strategy, the same way,
But like I,
the
but the
same.
thing is, like every trade is unique. That's what he said. Like, how can I replicate 8 trades using the same system if every trade is unique?
Of course, the same system is, of course, the system is the same, but every trade is unique, and that is why we have to use the same system across all of them. Just like a casino, man. It's just like a casino. All different people are,
And
they're all going to risk different things. The system stays the same.
all right. Okay. Sounds good. Thank you so much. I really appreciate your work.
No problem. Do 8 all in the same way, and then take it from there. Something will click in your head. You'll see. And
And how would I make sure that the
listen, man, stop analyzing. If more analysis made us more money, I would be analyzing all day long. Okay, let time do the work for you. Let the market work. And I don't think you're doing 1 hour or 2 hours the New York session. I know that you probably trade the New York session and then you probably monitor it on your phone all day long, guessing, double guessing. Oh, maybe I did this right or wrong. All right, I'm sure you don't 1 hour, 2 hours a day, and then you come back the next day and see what happened. I'm sure you don't do that. All right, but who knows? Apply what we said today. All right.
okay, sounds good. Thank you.
What else we got? Just got to learn how to listen. Where you at, boss? Somewhere in the Mediterranean. Show us your process from starting to watch chart to finalize trade. Well, I mean, the process is simple. You get on a monthly, you look at the most recent impulsive move. Are these big boys pushing it up, or are they pushing it down? I don't care about last year, 2 years, 5 years, 10 years ago. I don't care. Some of you are looking back in the 90s, trying to see what happened then. All right. I get on a monthly, I look at the most recent 5, 10 candles. Where is it being pushed, up or down? Okay, and that gives me my bias, my directional bias. This is the only time where I look at bullish or bearish. We have a question to answer. Are we bullish or are we bearish? Okay, and the monthly tells you. Forget the weekly, daily, 4 hour. Some of you are actually trying to see if we're bullish or bearish on a 4-hour chart or on a daily chart. You could have 5 bullish monthly candles and 1 bearish monthly candle. Of this bearish monthly candle, it looks like a downtrend on the daily. Okay, that doesn't mean we're bearish. All right, but get on the monthly and determine. Look at the most recent 5, 10 candles. Where is it being pushed, up or down? And you may have a third scenario where it's neither up nor down. It's a potential reversal. All right, which it may be tricky, but forget the potentially reversing scenario. All right, let's just think about bullish or bearish. And let's just say it's bullish, like AUD, USD, clearly bullish. Okay, look at the most recent monthly impulsive move. Clearly it's being pushed up. Okay, so we answer that question number 1, bullish or bearish. So we're bearish. I mean bullish on the monthly for AU, for example. Now, what the hell does that mean that we're bullish? It's very simple. If you're bullish, you can take a buy order or you can take a sell order. Congratulations. I wish there was a third thing that you could do. There isn't. So you're either going to buy and you can sell. Now you have some of these kids saying, if we're bullish, you only buy. I disagree. The banks don't only buy. They do everything. Okay, so we buy and we sell, but we don't treat them the same. If we're bullish on the monthly, then we can buy or we can sell, but we do not treat them the same. Okay, we have a high probability trade, which is a HPT, high probability trade, or we have a low probability trade, an LPT. And if the monthly is bullish, very simple, then the buys are the HPT and the sells are the LPT. Now you can do both. Of course you can do both, but you have to understand, is this a HPT or LPT? Okay, so I look at the monthly. All right, we're bullish. Buys HPT, sells LPT. All right, done. Now, how do we treat them the same? Do you think you're going to treat a HPT the same as a LPT? If the monthly is bullish, do you think we're going to treat the buy the same way as we treat a sell? Absolutely not. What are the only 2 differences? The HPT, because it's in alignment with the monthly directional bias, we're going to have a farther target, okay? And if it's an LPT, we're going to have a closer target, a closer swing point. And there's another way that we differentiate between the HPT and LPT. The HPT, if we're going with the banks, we're not going to be very quick to get paid. We're going to let it run, okay? You can go risk-free, let it run. You can close a little, let it run. It really doesn't matter, all right? And for the LPT, you want to be quick to get paid. Remember, LPT is against the monthly bias. So you want to be quick to get paid, right? The trend could continue at any moment. So after labeling clearly what is the HPT, is it a buy or sell, and what is the LPT, then you can go on your time frames, macro time frames, and draw your zones. Remember, we only use 2 time frames, a macro time frame and a micro time frame. Forget all these kids who go through all the time frames and then they see, well, let's see what looks good after seeing 20 time frames and 20 different charts. How are you going to make a decision off of that? All right, you only need 2 time frames, a macro and a micro. Basically a bigger picture and the smaller picture. All right. What is the macro time frame? What do we use that for? It's to draw our zone for analysis. This is the time frame we analyze on. These scalper kids, you guys can do a 4-hour macro, which is the time frame you analyze on. And you can have your micro as a 15-minute time frame. And this is the time frame you enter on. This is the time frame where you try to see, when do I click? This is a timing thing. Okay, this is the whole game, is when do I click? Well, you go on your micro to see exactly when. Now, obviously, when is when you see the proper signal. Okay, a bearish engulfing at your sell zone, a bullish engulfing at your buy zone, anything. It doesn't matter, but after going on the monthly, you draw your zones on your macro and you try to find your entry on a micro. Can't make it any simpler than that. Stop going on 20 time frames and going through all of them, and then hopefully something looks good. We don't bet money on looks. We have a system to trade. Okay? Now, if you've been doing this 5-10 years, yeah, maybe you can bet money on how it looks because you see things differently like that. But people who aren't seasoned in this game, you don't bet on what looks good because you're a retail trader. Usually what looks good to you, it looks like a sell. Usually it's a buy because we know 90% get wiped clean. So if it looks like a buy to a retail brain, it's usually a sell, all right, and vice versa. But this is how I break down charts. It really doesn't matter what the chart is, all right? Let's see what else we have. Show us your process. That was the whole process. 10 pips stop loss max. Take profit. Listen, anybody who has a target of 10 pips, you're in the wrong life, okay? I'm sure there's a lot of these other gurus on Idiotgram. They'll get you 10 pips, all right? I think the other day I clicked by accident, I got 10 pips. You want that stuff? Go find someone else. We don't do 10 pips. That's crazy. That's even crazier to think about it. Fear of being wrong. Period. Pretty much. But here's the thing, man. Fear of being wrong. You guys don't understand that there's no such thing. If you followed your system. Now, if you don't have a system, you're already behind. But if you have a system, for example, your system is, I'll sell after a valid sell signal at a valid sell zone, and that's your system, and you followed it, but you lost money, that doesn't mean you're wrong. I was talking about this with someone earlier today. Here's the tricky part about trading. You can make money and still have done the wrong thing. And you can do the right thing and lose money. Okay? So you can do the right thing. You did exactly the right thing and you lose money. And you can do the wrong thing and make money. This is why trading is very tricky, and it wipes your accounts clean like Mr. Clean. Okay? It doesn't mean if you made money, you did the right thing. And it doesn't mean if you lost money, you did the wrong thing. You have to differentiate. As long as you followed your system, you did the right thing regardless of the outcome. There's no such thing as being wrong. Obviously, if you didn't follow your system, then absolutely you're wrong. It's going to hurt. All right? But no such thing as being wrong. If you followed your system, you did the right thing, and you're right regardless. All right? Is this one of your students? I don't know. Yeah, the system is your rules. You apply the same rules. All right, but imagine if you had to drive and they didn't tell you that the red light meant stop and the green light meant go. Imagine there were no rules. You think you could drive properly? No, you can't. Same goes with trading. If you don't have rules, you're gonna crash. And I don't mean rules like, okay, well, if I do, I mean you live and die by them. I mean you'd rather have your arm chopped off than break it. That's what I mean by rules. Rules are about everything. Without it, it all crumbles. We are not paid to analyze. You're right. You're paid to trade. A lot of you guys think you're paid to analyze. You get paid to draw all the zones. You get paid if you draw everything so clean and accurate. No, you don't. You get paid to trade properly. End of story. Let me hop on this, bro. I'm in class right now, but I can go to the bathroom right quick. Nature is chirping. Yes, sir. Traders, I mean, if you're a trader, first of all, you're out of your mind. And second of all, you have to be very calm. It doesn't have to be externally, but internally. You have to be at peace. You can't have any inner conflicts. And if you do have insecurities, you have to attack them, not hide them. Pull them out from the roots. All right? Trading is you against yourself. This has nothing to do with the market. It has nothing to do with your broker. Even though he's trying to make you broker, you're broker. All right? But trading is, you're looking in a mirror. This guy who was right here on the live, he has to look in a mirror. Not more analysis. Go buy more mirrors. Forward testing is greater than back testing. Do you never back test? I mean, rarely do I back test. If I have some systems or, creating some EAs, yes, back test. But you gotta forward test live. Okay, that's the real learning. All right, and start small. But there is nothing you're gonna learn better than forward testing, which is just trading, which is what everyone is trying to avoid, is actually trading. All right, but try it out. footprint still apply on very, very large candles? Yes. BFI own everything? Yes, almost. How you cut out impulsive trades? Well, that's a tough one, man. Then you have to define the word impulsive. Okay, even just that word is impulsive trade is basically a trade that you take out of an emotional impulse. Maybe that you, oh, what if I miss out? It's just something that you do impulsively. Okay, and if you're that kind of trader, then you have obviously psychological problems that you have to address. Okay, what is making you impulsive? That's what you have to ask. That's a tough one to answer. What does HPT, LPT, like I said, HPT is a high probability trade and LPT is a low probability trade. If you're bullish on the monthly, buys HPT, sells LPT. If you're bearish on the monthly, sells are HPT and the buys are LPT. Obviously, you can take both. You can buy and you can sell, but make sure you understand the potential of each. The problem is we might be bullish on the monthly, but you guys take a sell and hope it goes down to zero. Okay? Or we're bullish on the monthly and they'll take a buy. It's a HPT, but a few pips, they'll bail out. Okay? Both of them are mistakes, and every single trade you take, you have to know, is it a high probability trade or is it a low probability trade? Am I with the bankers? Am I against them? Okay? So you can align your expectations, even though this whole word expectations is very dangerous. Kieran, what's up, buddy? Don't we have a session coming up? Do you scale the macro micro to like 15.5? No, I don't get on a 5-minute. 15-minute is already small enough, man. What you want, even more micro? And like I said, you have to use your time frames in couples. Couple your macro with your micro. A 4-hour macro, you want a 15-minute micro. A daily macro, you want an hourly micro. A weekly macro, you want a 4-hour micro. Like I said, macro is for analysis, and micro is strictly for entry, which is when do I click? Also, it's where do I click, but it's mainly a timing thing, this trading. It's a timing. It's when do I click? When is that point that I click? It's the whole game. With the 1 month macro, what time frame? Well, I don't use the monthly as a macro. I don't use the monthly. Like I just said, monthly is just for your directional bias. Am I bullish or am I bearish? What is the HPT? Is it a buy or a sell? The monthly tells us. And then I go use the smaller ones to trade and draw your zones and enter. Monthly is for directional buys. Like I said, you use the most recent impulsive move. Just look at the most recent 5-10 monthly candles. They're going up, we're bullish. They're going down, you're bearish. You're better off sticking with that. Forget what happened 1 year, 2 years, 10, 20 years ago. Forget all that. Best way to know break of structure, when the structure breaks. I don't know how do I tell you when the best way to know when to break a structure? Okay, it's a previous, let's say it's a down move. The previous swing low is broken. Psst, psst. Come here. The previous swing low is broken. Even if it breaks just by a pip, that is a break of structure. All right, I mean, that's pretty clear. How to use a multi-time frame? Watch this again. I just explained it. Double-digit risk rewards. Come on. It's so unbelievable, right? That's so impossible. I can't see you doing it, so I can't imagine myself doing it. You guys are something else. You're only wrong when you do not follow your system or don't have a system, pretty much. That's why people without a system, they trade randomly. And most people do trade randomly. They probably go on a bunch of time frames, see what looks good, then they click, and then they start doubting everything that they did after they get in. And obviously they don't have a target before they get in. They don't want to set a target before they get in when their brain is crystal clear and objective. No, they want to set targets after they get in, when there's money on the line and their thinking is blurred and they're the furthest from clarity and they're thinking subjectively. Yeah, that's when they want to set targets. That's a recipe for disaster. What is the real percent of BFI activity? Well, we know 4 banks run half the volume, and we know 10 banks run 80% of the volume. So I'm not really worried about the other 20%. Let's just worry about these 10 banks, and we all know who they are. Losses are lessons, absolutely. Is a 50% win rate with 1 to 3, 1 to 5 good enough? I mean, good enough. To me, that's terrible. Okay, and if you're a student in the course, you better send me a message, man. What 50% win rate? You lose half of all of them? 1 to 3, 1 to 5. I mean, what the hell's good enough for you, man? That's a very subjective. Well, I'll just answer. Is a 50% win rate with a 1 to 3, 1 to 5 risk reward good enough? No. Let's see these guys. Hey, we can get multiple in here. Let's get Jordan here. Let's add someone. 1 second. Jordan General Patton. No,
What's up? Don Zero.
we had a live session, man. What you doing on this?
I'm in that swing, baby.
Which one?
AU.
AU?
Yeah.
Oh, it's long, right?
Yeah.
So what's the chart? Let's see what you got cooking over there.
Let's see it for the peeps. I'm in a GJ right now, a little GJ Scout, but
Hey, sell?
I got a nice little. I got a LPT going short on AUD USD.
I actually from 0.7 and shorts, pretty much hedging from 7.3. So
Yeah, exactly. I got in at the tip of this guy right here.
that's AU, right?
Yeah, AU, sir. Yes, sir.
Now, is that an HPT or LPT?
That's
Why?
LPT. Because the monthly is bullish.
And how is the LPT different?
We secure our profits. Our profit system is different.
You want to get paid very slowly or quickly?
You need to get paid quick on those LPTs.
Because why? It can reverse and the trend continues at any moment. But of course, you can make money LPT. The dollar you make off LPT, it's the same dollar that you make off HPT. But what is that? Is that that was actually, there's a zone to the left on it. I think there. Is that a zone you have drawn?
Yeah, that's my weekly.
You see how fast it went up to that weekly zone?
Yeah, just tapped it.
Let's look at the micro.
All right.
50% of the zone, right?
Yes.
All right, man. Keeping it simple here. Now, are you going to be real sad that LPT doesn't work?
Not at all.
Not at all. We know it's the LPT. This is why we label our trades. Your LPT. We gotta align our expectations. So you got a GJ short as well?
I have a GJ short, yeah. Here's that micro, the 15.
Man, GJ went crazy this week.
Yeah, GJ's being silly right now.
It's really not at any. This was kind of manual mode on it.
Yeah, exactly. You just kind of had to.
Zoom in. What's happening right now?
Sorry, I'm on an ultra wide screen, so it's a little bit. But yeah, right now it's
It's
going back up.
Are you break even or not?
I'm at break even, yeah.
GJ, man, is still there's no clarity so far.
Yeah, it's okay.
If
Yeah.
you're holding buys, hold them. But I'll be very just like you said. You can sell, but it's
I closed that one yesterday. I was up like 400 pimps. I kind of punished myself for not having a target, so I closed it.
man. I asked, did you have a target? You said no. Well, what's a target? Infinite.
Yeah, right. So yeah, I closed it. I didn't earn that trade, so I just closed it.
Here's the thing about target, man. There has to be the point where if you get taken out, then you have to be fine. Okay, then you're pretty much where even if it takes you out, you're fine with it. Pocketed enough, right? If it takes you out and it bothers you, then obviously you need to change your processes. What is that? The course?
Yeah, that's the course. I'm just going over trailing stops right now.
Zoom in on that. Let people see for free. As the market makes more money available to you, you secure profits as the market provides. That's the problem with these people who say, okay, when I get a risk reward 1 to 2, 1 to 5, I'm out. And once I make 10%, I'm out. Well, what if the market wants to give you more?
Yeah, you're not giving yourself enough credit.
Imagine on GJ if you said, okay, pips are 100 pips, then you can never get to 200 or 300. You get the point.
Yeah.
All right, man. You got any questions for us here?
No, for all you students out there, just you guys got the right coach. Just pay attention to what this guy's talking about.
They're not gonna listen, man. Idiot.
You don't need to follow anybody else. Unfollow everybody.
Are you sure, man? You sure they shouldn't follow 1,000 pages? Maybe they can have more clarity.
Man, just stay a course.
All
That's
right.
all I got. That's all I got to say.
We're gonna get back to our session.
All right, Don Zero. Have fun out there in the Mediterranean. Take a little dip for me in that pool.
I will, man. You need anything from here?
No, I'm good.
All right, man. We'll get back to business.
You all right?
All right, man. Take it easy.
Peace.
All right, guys. I think we want to see Lambos and Rolex. Well, you're gonna make me take off my watch. Well, Lambo's outside, unfortunately. We can't show you that one. That's what you guys want. Lambos and Rolexes. You guys want to learn how to get them, or you just want to sit there and watch other people who have them. That's Idiogram for you. Learn how to trade. Learn how to detach from the outcomes. All right? Especially during times like these. You guys want a JOB, just over broke, or you want to really control, your financial situation. That's most of the people I talk to, that's why they got in, is because they can work from anywhere. I'm here on the other side of the world, so we're still working, all right? And the same click that makes you $10 is the same click that can make you 10 million. You don't have to click harder, all right? Maybe 10 years, you guys will figure it out, all right? But I got somewhere to be, and maybe we'll see. We'll do this again. All right. Yeah, we're gonna get the green Lambo. Make sure just your ass can fit in it, because those are pretty tight. All right, guys. I think I still got the Q&A open, so you guys have questions, just maybe send them, because I'm trying to answer all of them. All right, and I'll send you guys the invoice later. All right, guys, take it easy.